This one yesterday, and this by far has been like the best trade I've taken, not only this year, like in my whole trading career. We've taken a lot of great trades, right? But what is the biggest issue? The biggest issue is holding to the winner.
Hey everybody, Aiman and Simon here. We're coming at you live with another kind of trade through via the stock trading simulator. Today we have the pleasure of going through one of Aiman's best trades that he's taken probably all year, I'm assuming. Well, we're sitting December 16th, so basically all year is my guess. So I'm really looking forward to getting Aiman's kind of analysis from an execution standpoint, and you guys should all be very excited because I had to kind of talk Aiman into really pumping his own tires and us actually covering this trade, because I'm also curious how he kind of went about it and did it. So the trade was on Apple nonetheless, and really what I wanted to dive into first, kind of typically as Aiman and I do in these videos, is start kind of from the larger time frames, build our bias, and then I'll hand it off to Aiman, who can really kind of dive into his execution and how he went about taking the live trade. But before I dive into that, if you guys aren't already subscribed for our mailing list, make sure that you do. So on the stocktradingsimulator.com, if you head to the bottom right corner, hit the little mail icon and sign up to the mailing list. Aiman and I actually send out homework for market replay. So there's different trade ideas, different styles, strategies that you can practice after hours and really get your reps in replay practice. We send those out twice a week, as well as these videos that we do at the end of the week. So I'd really recommend staying on top of that if you're a new and developing trader looking to find a strategy and your edge. But without further ado, let's dive into Apple. So Apple has been extremely strong as of late. I was telling Aiman actually right before when we were prepping for this video that I've actually taken a swing trade on Apple. And, being in the midst of final exams, it was really nice that, missing all the intraday trading, I could at least watch one swing position, tick up over the last, week or so, or a couple weeks. And, nonetheless, Apple has been holding the 920 EMA area for quite some time. You can see the bounce there that was at the beginning of December. It continued to break all-time high. And then it's pulling back once again and offering an opportunity to actually get in once again at the 9 EMA. So this is one of our daily setups that we trade from, a pinpoint and trading key levels of support and resistance setups, right? Is looking for those bounces and looking for those extremes off of the daily 9 EMA and some of the other major moving averages like the 50 SMA and the 200. But in the case of Apple, you had a beautiful pullback to the 9. When we took a look at the 60-minute chart as well, what you can see is a fairly large sell-off, right? And you can see consecutive candles selling off on the 60-minute chart. So when we're looking at, major swing highs and swing lows and documenting our key levels of support and resistance, what Aiman and I love to see are those extremes at, yesterday high or 2 days ago high, and same thing for lows. And in this case, right, you had consecutive candles selling off on the 60-minute chart on Apple, and you had a very clear bounce off of yesterday low. So considering the fact that yesterday low at around 172.20 also coincides with the daily 9 EMA, as well as with the extreme from yesterday, it'd be a level of interest that would be a good opportunity for a reversal, depending on what the lower time frames essentially show for confirmation. So once again, would we recommend taking it just because there's a level there? No, you want to, integrate those signals and actually have, that degree of confluence. But just looking at, the 60-minute and the daily chart, we can see a major moving average. You see a strong uptrend, and you have the confirmation on the 60 for giving you that extreme level that a previous reversal occurred at. It sets up, an excellent framework to essentially flip and develop your bias given the lower time frames now. So Aiman, without further ado, I'd love to kind of see you dive into your trade execution and what happened yesterday on Apple for you.
Thank you, Simon, for that explanation. And hey, everyone again. So Apple, I've taken this one yesterday, and this by far has been like the best trade I've taken, not only this year, like in my whole trading career. Not that it's the best trade I've taken. We've taken a lot of great trades, right? But what is the biggest issue? The biggest issue is holding to the winner. So many trades me and Simon has taken just went up to 10 hours, 20 hours, and maybe even more if we would have held on to them. So the biggest issue around here is holding to the winning position. And yesterday I finally did it. I decided to hold on to the winner for long, and that made this trade really beautiful. Anyway, going to this trade, Simon did a really great explanation, and we have the 172.20 level, which is yesterday's low marked around here. What we usually do is we wait for the stock to drop closer to that level. We want to see sort of a support or increasing volume, which is exhaustion volume, closer to that level, and then we try to catch a reversal. Another good thing about Apple around here is the fact that this thing has almost sold off its full ATR. The ATR on Apple somewhere around $3.5 to $4, and you could see that from the high of the day to the low of the day, it's approximately $3.5 to $4, which indicates that we already are oversold for today on a daily chart, which shows the support for a trend continuation. So basically, yes, we are catching a falling knife. Yes, we are playing a reversal, but we are playing a reversal in the direction of the trend or in the direction of the bigger time frames. Now, the reason I didn't play it around here, and I really wanted to play it at this stage when it did this fake breakdown around here, is the 15-minute chart. You could see that on Apple, on the 15-minute chart, we had a reverse hammer down here, and we made a new low. Once I saw that new low, I was a bit scared because after a reverse hammer, it could just continue selling off, and I decided to wait for more before I set my limit to the long side. Anyway, I saw this move to the upside. I almost regretted missing the move, but I decided to set a limit order closer to the low of the day. The low of the day was 172.30. I set a limit order at 172.47 or 50, somewhere around that. I don't remember the exact price. And I just waited for the price to dump closer to my position. Now let's play it and see what happened. Anyway, this entry, it wasn't manual. It was a limit order which was set closer to the level, and it started dropping closer to the level. And I would say maybe I had a bit of luck right there. FOMC talk came at 2 p.m. and I left my order. Why is that? Because the pattern is bullish overall. The level of support is strong. It sold down more than the ATR. And I knew I will not get a lot of slippage because you could see the price is $1.50 above my stop loss. Even if it dumps fast to my order and then goes to my stop, I just lose my original 1 hour. And that's it, like price dropping, and you could see it's totally manageable. The drop is not so fast. You see, it's going into my level where I hit my buy button at 174.47 or 50. That was basically a limit order. I was so lucky to get exactly at the tip of it. And if this thing failed, I had a stop loss below this level. So if it continued dropping down into my stop loss, I'd exit. If the level holds, I'd continue holding on. Did I know that the level will hold? I didn't know, and this is something I repeat over and over. We never know if the level is going to be strong. We never know if the level is going to hold. But how do you make your money? You make your money based on math and based on stats. You know that most of the time, you can get a good risk to reward over 7 hours. So you don't need to be right every time. You just need to be right 1 out of 7 times to make money. You don't need a huge percentage win rate. All you need is just hold on bigger to your winners. And this is it. It went in my favor. And this was the difficult part. I didn't partial. I didn't exit here. I didn't exit here. I didn't exit there. You see, like really tiny stop loss, and the price is already just roofing. I think I held on to this one for over 1 hour, but let's assume that you are just watching it real time. How can you play it? You can play it in many different ways. One way you could play it is once it hits your potential risk to reward that you're looking for, and mainly me and Simon are looking for a 7-to-1, you could start taking partials. Other way to play it is to play intraday levels. You could see that, okay, this is the high of the day. Maybe I want to take a partial closer to the high of the day. Why did I decide to hold it longer? Because there was some OMC talk, there was a sell-off at the beginning. All the shorts who tried to play to the short side, ignoring the level, are getting squeezed. And I know, some news-driven with a really beautiful entry, there is no reason to sell. Just hold on for a bigger run, and that's why I decided to hold on longer to this position. Anyway, that's it for today, guys. And this is basically how we are looking for levels and how we're executing those trades. If you have any questions, feel free to type them in the comment section. Make sure to sign up to the weekly simulator practice homework. We are sending an email twice a week on Wednesday and on Friday, where we are giving you some stocks we actually have traded with an entry, stop loss, and target. Basically, the way we managed the trade and why we executed it, along with a weekly recap of one of our trades. If you have any feedback, also feel free to email us. Have a good day, everyone, and bye.
Thanks, everyone.